This is Shelley Craft coming to you live on SNNLive. We're at Cambridge House Resource Investment Conference 2014 here in Vancouver. I have with me David Morgan of the Morgan Report. Writes a newsletter, featured speaker at the conference. David, welcome to SNNLive.
Thank you, Shelley. Great to be with you.
It's good to have you. What are you talking about today?
I'm talking about the 10 reasons to own gold. There's a big article out recently from Bloomberg about really 10 reasons why you don't want to own gold. So there used to be a show called Point Counterpoint, and I'm taking that approach. Their point, why would you own gold? And then I do the counterpoint. So I really had a lot of fun with it. I think it's really pertinent to right now because we've had a lull in the markets for a couple of years, as we know. And just about every point that they make, I can counterpoint it and make a much stronger case than they do, with the exception of leverage. They talk about leverage. I pretty much agree with what they had to say on that. But I did a lot of fun with it, and I think it's going to be an exciting little speech. It's not much that people here don't know, but I think it's reassuring to re-examine the logic behind the mainstream media and what they pretend to know when in reality, look, let's face the one fact. All fiat currencies have failed 100% of the time. It's a fact. So to sit there and poo-poo gold and say, well, what good is gold? The fact is the opposite. Gold is something that's lasted thousands of years. Name one fiat currency that has. Come on, Bloomberg, thanks for that softball. Let's get on with it. And then I move on from there. So it's a lot of fun.
But it's not the first time that in the U.S. they've panned gold. I don't mean that literally.
Right. Yeah. Right. Well, yesterday I think one of the best panels that I've ever seen here was Mike Maloney, Peter Schiff, Rick Rule, and Ross Beatty. I mean, four really big, powerful names in the industry. And what Schiff said I thought was very pertinent. He said, look, gold was in a bull market for 12 consecutive years. Year 2013, it dropped off. And all the pundits can say in the mainstream is, we told you so, we told you so. What they don't say is they told you gold was going nowhere for those previous 12 when it kept going up. So, are you kidding me? And I'm with him. He's right.
So, in other words, eventually a bear is right.
Well, eventually a bear is right, and within this secular bull market, you're going to have a bear phase. I mean, it's normal to see this. Whether it was manipulated to get there or not is beside the point I want to make, which is that you normally get a bear trend in a bull market to shake out the weak hands, and that's what's taking place. I think it's about over. I think we're moving up from here.
So what do you think is on the horizon? If we had a correction, is it a dead cat bounce next?
No, I don't think so. I think we've built a base, especially on the silver side. I'm not convinced gold's made its bottom for this phase of the market, although I think it has. Silver, I'm almost certain has. We had 7 months above the intraday low of 1817. So I think we're coming up over the next year, 2014, and I expect to see a pretty good move. The key area for me is technically 26 on silver and 1550 on gold.
You are the silver guru,
Well, once in a while. So I want to see those markets, move up beyond those levels and see what happens after that.
Well, if you can go by the amount of buzz that I'm feeling at this conference, and we have that sensibility of going to a lot of conferences, and it just seems like there's somewhat of an uptick to the people's sentiment that are walking around and engaging with the CEOs of these mining and resource companies.
Couldn't agree more. I mean, these are things that are intangible. You can't sit there and, oh, my feeling, we think, but we are human beings, and we do have feelings, and I'm with you. I feel that this conference is seeing that it's turned, whether they even know it consciously or not, and maybe subconscious. So I don't get too esoteric here, but I really feel like, hey, yeah, the bottom is in. These people are serious. They're starting to, open up their wallets again, and I think, better times are ahead.
Well, in light of that, I've heard several stories about stocks that were trading at a few dollars a share before the bust, and now they're trading at 10 cents. And one of the conditions that I ask is, has anything changed in the company, or is it strictly a result of the market?
Yeah, well, a lot of cases it's the market, and some cases it's the company. I mean, there's a few examples there. One guy stopped by the booth yesterday. He's from the town I am in, and he has a pretty interesting project in Argentina. We covered it years and years ago. And he goes, yeah, my stock doubled. It went from 1 cent to 2 cents. And that was a stock that's like $1.27 or something. So, it is dire times for a lot of these junior companies and the majors. I mean, the majors are off substantially as well. But, in most cases, the rocks haven't changed. What has changed changes the cost of energy, regulations have changed and that type of thing. So there's a lot to look after. But on balance, yeah, I think most of the worst is behind us. In fact, I think it is. And we're going to move up from here. But there are going to be some laggards that aren't going to make it.
So to finish off, wrap up, what were 3 things, if you can, that you counterpointed the Bloomberg message about gold that our viewers would be interested in hearing?
Oh boy. Okay. Well, one is that why do you own it? You own it because it is the safest currency or safest money in the history of mankind. Okay, so that's point number one. Another one, they made this big thing about gold doesn't pay any dividends and it's not a business. Oh, gold isn't a business. It's not meant to be a business. Money is not a business. Money is a means of exchange and a store of value. The current money is a means of exchange, has no store of value. It's valueless, or its value is becoming less and less. So that's point number 2. And third, I can't recall. I mean, there's 10 of them, but
doesn't matter.
Yeah.
You gave me the top 2, and I agree with both.
Yeah.
So 2014-15, where do you see gold? Where do you see silver?
Up this year, I think you're going to see, like I said, 1550 or higher in gold and 26 or higher in silver. We're looking for 30 in silver and probably 1700 in gold sometime during the year. 2015 transition year, I look at the blow-off being about 2016, and those are going to be some really big numbers. They're hard to predict, but it's going to be of real value, substantially higher than we are right now.
The Silver Guru sounds very bullish.
Thank you, Shelley. I am.
Ladies and gentlemen, let's get a website.
And it is www.silver-investor.com.
Ladies and gentlemen, David Morgan, The Morgan Report, newsletter writer, and featured speaker at conferences, including the Cambridge House Conference. We're at Cambridge House in Vancouver at the Resource Investment Conference 2014. I'm Shelley Kraft. This is SNNLive. David, always a pleasure.
Shelley, the man with the money. Thank you.